In today's episode, I'm going to teach you how to use the volume profile indicator. Volume profile is a technical indicator you can plot on your charts that analyzes the volume that occurs, and it shows the different prices where the most volume is taking place, and it communicates a central line that is the point of control. When a stock or cryptocurrency, futures contract, whatever, is trading above the point of control, the bulls are in charge. When it's trading below, the bears are in charge. And so it's especially important to watch this POC, point of control line, for support and resistance and for crossovers. We're going to jump into the charts here, and I've got a full screen slide deck that we're going to dive into as well. As promised, this month, each day that I am double my daily goal, which is $5,000 or higher, I'm teaching a full-length class on the strategy or the indicator that I found most helpful on that particular day. So you can see right here, my P&L right now is $11,661.13. And I will hopefully be the first to let you know that, hey, my results are not typical. Trading is risky. But if you're tuning in here for the first time, my name's Ross Cameron. I'm a full-time trader. I've been doing this for more than a decade. And what I want you to know is that my profits are audited and they are real. And this is in contrast to a lot of traders on social media who talk a big game but don't have the track record to back it up. So everything that I share with you in these episodes comes from my own experiences trading the markets. All right, let's go ahead and dive into the slide deck here, and we're going to get this full screen, and we're going to start talking about how to use volume profile. So the topics of today's class, I'm going to define volume and volume profiles to make sure we're all on the same page as we get started. And I'm going to show you how I use volume profile in my trading. Then I'm going to evaluate the pros and cons of using this indicator, and I'm going to recap each of my trades from today. Now you will note that my biggest loser, I'm down $3,719, and you know what? Those were my first trades of the day on that stock. So today's a day where I went into the red nearly to my daily max loss, which is $5,000. My daily goal is $5,000. My max loss is $5,000. I went down nearly $5,000 this morning before recouping those losses and finishing in the green, thankfully. And volume profile helped lead the way to me finding some profit in the market today. I got off to a rough start, but I finished strong. So we will recap all of these trades at the end of this episode. All right, so we're going to go full screen here. And by the way, those of you guys tuning in for the first time, I hope you guys enjoy this episode. And if you do, I hope you hit the thumbs up and you subscribe to the channel. So we're going to start with the definition of volume. Most of you probably know what volume is. Volume is the total number of shares traded during a period of time. So volume is traditionally displayed along the time axis of a chart below each candlestick, and it communicates trend and sentiment. So right down here is where the volume is displayed on this chart. So when I say the time axis, I mean right along the very bottom. We've got time at the bottom right here, and then we've got price on this axis right here. So we've got time and price. So as time goes on and price goes up, of course, the chart looks like this, which is what we would like to see. So this is your standard volume pane. We usually call it a pane, kind of like a window pane. You can sort of move this up and down, and we've got volume plotted on the bottom. Now, volume is incredibly important in the market. It is the number of shares they're trading, and it helps communicate what sentiment is like in the stock. If it's really bullish, we'll see a lot of volume, and of course, we'll see the price moving up quickly. If it's really bearish, we'll see a lot of volume, and the price is moving down quickly. So this is sort of the relationship that we look at as we're watching these stocks moving up and down. And of course, the way I'm finding these stocks is right here on my scanners. So if we jump back into the slide deck, this is volume, which I think probably all of you are familiar with, although some of you may plot volume slightly differently. Some people use the same color regardless of whether the candle is green or red. I want the color of the volume bar to match the color of the candle. That is very important for me because what it helps me understand is whether we have high volume on the buying candles or on the selling candles. Now, what volume profile does is it reports the number of shares that traded at different prices, not at different times, but at different prices. So it displays the volume across the price axis of a chart, and it's right here. So this is actually displaying all the volume that takes place, and it's aligning it to the different prices right here. And what we end up getting is a point of control, which is this red line right here. I'm going to talk about that more in just 1 second. But first, I want to make sure we all are using the same volume profile settings. So for most platforms, and this not every platform is going to have volume profile, but for most platforms, you can go to your indicators and you could type in volume. And then you'll look at all the different volume indicators that exist inside your platform. I want to use volume profile, and I'm going to choose a visible range. You could choose a fixed range, but then you have to manually select the range, and I'm going to choose visible range right here. So you click on volume profile, you select the visible range, as I did right here, and then you'll see the VPVR settings, which are the volume profile settings, and this is how I have it set up. These are the standard settings. Value area, volume is 70, row size 24, volume up versus down. These are all the standard settings that come when you first load it up. Now, I have my point of control by default in red, and that's the same as what it is standard. Of course, you could change this to your liking if you would prefer it look different, but I think it's usually in this case helpful to use more or less the same settings that other traders are using, especially that way if you're in a community where you're looking at other people's charts, you can understand exactly what someone's looking at. It's not like, wait, what in the heck is that? You know, oh, this is volume profile, and that's what that red line is about. Because I don't use the red line for anything other than the point of control. Okay, so now that you've got your volume profile set up on your charts, and by the way, in terms of time frames, I do not use it on my daily chart. This is an intraday indicator, and I use it primarily on the 5-minute chart. But the interesting thing with volume profile is just like volume weighted average price, your volume profile is going to be the same no matter what time frame you're trading on, because it's just showing you the volume that's occurred today at the different prices. So the only way the volume profile will change is if you're looking at a very narrow view of the chart, in which case it's only going to show you the profile for what's visible. So because I keep my 5-minute chart zoomed out, I have it on my 5-minute time frame. Because I have my 1-minute chart zoomed in, if I put it on the 1-minute time frame, it would actually be inaccurate. So I'll show you an example here of what this would look like. So, well, that's fine. But I wanted to grab the volume profile. So let me just grab volume profile here. Let's see, copy and paste. There we go. So if I zoom this in really tight here, the volume profile is going to start changing based on how zoomed in I am. So let's see, if I zoom further out, it starts moving around. So that's just something to be aware of. So for that reason, I don't use volume profile on my 1-minute chart. And that's just a choice of display. And it's because on my 1 minute, I'm pretty much always zoomed in. So my 1 minute is zoomed in like this, so I can see the price action very clearly. And then my 5-minute chart is zoomed out. All right, so I choose to use it on the 5-minute, but you can do as you'd like. All right, so now that we've got this on, let's talk about volume weighted average price versus volume profile. So many of you know that for probably a decade at least, I've said volume weighted average price is one of my #1 indicators. I love having volume weighted average price on my charts because it clearly tells us the average price of a stock with volume factored in for the day. So it is like the equilibrium point of a stock. And when the price is trading above it, we're bullish. And when we're trading below it, we're naturally going to be bearish. So VWAP is an area that is fiercely defended when a stock dips down. So when we have a stock, let's just say, that is really bullish and it makes this nice move up, and these would be red candles, but we'll just do this for now. It's fine. So you get this really nice clean move up. You get these pullbacks. Your volume weighted average price is going to climb up with you, right? And then what ends up happening is if the price dips down and breaks below VWAP, that's almost always a high volume breakdown as you're dropping. And then if the price, and of course, if you break below VWAP, your VWAP is also going to start to decline like this. But then if the price comes back up and breaks back above VWAP, that breakout is really important. So we always pay close attention to volume weighted average price as an area of support when the price comes down to it. If it can't hold, we usually see a big flush. And then when it comes back up, a lot of times it's resistance coming back up. But if we can break through it, we often see high volume on the breakout and a retest of high of day. So volume weighted average price is important. There's no question about it. And this episode is not going to dissuade you of that importance. I'm going to continue to use volume weighted average price on my charts for probably forever, for the foreseeable future for sure. But volume profile is pure volume, which is great. It displays the prices where the volume is occurring. And of course, it averages in the price and the volume. Volume weighted average price, it's essentially a moving average. So just like your 9 EMA or your 20 EMA or your 200 EMA, it's always lagging a bit behind price, which is fine. And it gives you that average price, that equilibrium over the course of the day. But volume profile, in contrast, is going to adjust much more rapidly when we have high levels of volume. So what often happens is a stock will very quickly make a move up, sometimes on light volume, but then it comes into an area where we have a high degree of volume and we have a lot of consolidation. And that's what ended up occurring kind of right in this area right here. And this red line shows us that this was the price that had the peak amount of volume. The price to the penny looks like about $2.75. And that was well above the volume weighted average price, which is in orange down here. So in this case, something that's interesting is that there was a moment where the price was below the point of control, but above VWAP. And what that sends are contrary indicators. Because on the one hand, you're above VWAP, which is bullish, but on the other hand, you're below the point of control, which is bearish. So it's a spot to exercise caution. In this case, the price bounced up. It was not able to hold up at these levels, as it turned out, and the price came back down, and then we flushed back below the point of control. When we were back below the point of control and we were wedged between point of control and VWAP here, we were not able to get back up, and we ended up rolling over. And it's not super surprising because usually when the price is pinned between point of control and VWAP, you're going to have basically this upside resistance that was at this critical pivot. Sometimes I'll refer to a price as being a pivot, which means if we're below that level, it's going to be hard probably to break. But if we do break, we'll see a nice move. And if we're above it, then we want to see it has to hold, because if we break down, well, it's like game over. So a pivot is sometimes also called a trigger. So a trigger, again, is just a very specific price where we expect something to happen in terms of high volume and price movement if we break that level. So the point of control, also known as POC, is the price where the buyers and sellers have exchanged the most shares. Why is this helpful? So what does it mean if you see a price where buyers and sellers are having the biggest battle, the highest volume, and then we see that the price is holding just below that point of control price? That to me tells me that we have resistance at that level, and if we're below it, the bears are winning the battle. If we're holding above it, the bulls are winning the battle, right? So this tells me sentiment. And if I understand right now that the bulls are winning the battle and the price is holding above this critical level, then I'm going to have a stronger long bias on the trade, and I'm going to have higher expectations that this price can go higher. If the price is holding below this critical point of control, I'm going to be more concerned that we will not see the follow through that we want, and we're going to see, in fact, a rejection and a flush back down. What does it mean if that battle line is crossed, right? What if we have that very clear point of control line, the price has been below it, and then suddenly snaps above it? That tells us we're having a shift in sentiment, just like a break of VWAP. So many of you may not currently be using volume profile, and you may see these areas on a chart where suddenly you get a spike of volume and you're like, man, where did that come from? I don't understand. Or you're seeing an area that's clearly acting as support or perhaps resistance, and you're just not understanding why that level is such a battle. And once you turn on volume profile, you're probably going to notice that there are a number of levels that suddenly become obvious, because now this indicator is showing you, oh, that battle there was because that was the point of control. That makes sense. Okay, so let's see. So VWAP versus point of control. So the VWAP, and I'm talking about the VWAP price, like the current price of volume weighted average price. And I'll just show you on this chart right here. So right now, just for example, the point of control on this is below volume weighted average price. It's at, let's see, the current point of control line, I don't have it on my chart, but it's right around this level of 213. And then the volume weighted average price is right over here around, 513. And this one's around 537. So right now the point of control is a little bit lower, and that's because of the high amount of volume that occurred, well, right in this area. It peaked right in that area. All right, now we did get some decent volume up in this area, but we're back below that level. So as I look at this right here, you've got your volume weighted average price, you got your point of control. So how do I use these two and how do I compare them? So the volume weighted average price is a well-respected technical indicator. We know when the price is above it, the stock's bullish. When the price is below it, the stock is bearish. And trading above and below point of control, we have a similar bullish bearish sentiment and relationship. So the point of control is an additional price level that helps you visualize potential changes in trend or areas of support. So now let's look at this here. This is going to be the stock that I suppose is our case study today. LIPO, this stock ended up going up 257%. It might have even gone just a smidge higher than that. It was really an incredible squeeze. And you can see that this is a stock that I made $7,560.19 on. So this will be, and it was our biggest percentage gainer of the day. Now, before I go into this chart, I'll just step back just to give you guys context of how I found this stock. So the way I'm trading, I find stocks using this software that you can see right on my screen. And the top gappers scan right here is showing us our #1 leading percentage gainer pre-market. And that was LIPO, up 261% pre-market with 90 million shares of volume. It now has 192 million, which is incredible volume, nearly a quarter billion shares. And the float is 4.6 million shares. The relative volume is 28,800. So to help you understand everything that's going on here, what we have is a stock that is up 261%. Float is 4.6 million shares. It's got 28,000 times RV, which is relative volume. That means the current volume today is 28,000 times higher than average, which is outrageous. We have, let's see, so this was the float. This was the percentage change. We've got the price, which is currently, or it was $1.46 right here. This was the price. And we have, guess what? A news catalyst. So we've got a news headline on this stock. So this meets my criteria for being worth trading, because for me, I'm looking for stocks that, this is what this stock had, and this is my minimum. Up 10%, a float of under 20 million shares. So this one met that criteria. A relative volume of 5. Just 5 is enough for me. Price, generally, I prefer between 2 and 20. And this one was a little bit on the cheaper side, but I was still willing to trade it. And positive for news. So this not only met my criteria, it exceeded my criteria in a number of different respects. Okay, so I find the stock on my scanner this morning. These scanners are searching the market in real time for stocks that meet my criteria. So I've trained it to look for stocks that I like. So when I see LIPO, and I'll click on this so it comes back up on our chart. So I got to just link my chart up. So we're going to link that up there. We're going to click on LIPO. So when I pull up LIPO, I see that it's a pharmaceutical company. It's a NASDAQ listed stock, and they have initiates phase 2A trial for this medication. All right, so that's our catalyst. So now we understand why the stock is up this much today. Now, you don't have to be a pharmacist to understand that the stock is a pharmaceutical company. It's got news, and the price is up. I interpret that to be positive. I'm not an expert on the field, but I'm an expert on trading. And so I understand sentiment and how the markets move, especially in response to different types of headlines. So when the stock first starts popping up, I'm watching it and I'm looking for my entry. Now, something that you'll notice with both your point of control line, and I'll make this full screen, and your volume weighted average price is that these change as the price is moving. So as the price moves up, your point of control is moving up, your volume profile is changing, and of course, the volume weighted average price is moving up. So when this first was on the scanners, it actually started popping up at like 5 a.m. The news came out early. It pops up, it pulls back, it comes up, it pulls back. And when I sat down at about 7 a.m., it was our leading percentage gainer at about 70 cents. And at that time, I thought, well, I like it, but it's a little cheap. I don't know. Let's see what it can do. And the other thing that I said is, if we look at our daily chart on this, the 200 EMA, which is a daily level of resistance, is at 90 cents. So I kind of thought when we were up at 75 cents and then 80 cents, we were going to have resistance here, which we did, but we were able to break through it, which was good. Now we've come back down, but nonetheless, at pre-market, I was a little bit concerned about the risk that this would not hold up super well. Okay, so if we scan forward here, we're going to watch as the price starts to break away. And suddenly, because of the big surge of volume that we got right here, your point of control jumps up. All right, so now your point of control comes up to about this area. We had all this volume in this area, so that's the new point of control line, and the price moves higher. So we dip down, we come back up to about 85 cents here, and right here we move even higher. This is one of the first really good examples of the volume profile showing an area of support right here, right? Look at that. So this was an area that was a battle. Those of you guys who were watching this morning in this area, it was really choppy. And I didn't trade it here. I was like, I don't know, guys. It feels like there's a major tug of war happening. And there was. We were going above and below the point of control line. There was so much volume here. Buyers were buying, sellers were shorting. It was tug of war. And then we pulled away. We started to squeeze up, but now we were only like 4 cents away from our 200 moving average. And then it drops back down and it comes down almost to that point of control line where it bounces. As it comes back up right here, I thought in hindsight, I should have just gone ahead and bought that dip. But what I ended up doing was I connected a trend line right here. So I connected a trend line right about there to connect those two lines because I was like, clearly those are significant. And I also drew a trend line right about here. So I was connecting these lines right in this area. So now as the price came back up here, I was like, well, we're going to be running into this resistance line and we're right at the 200 EMA on the daily. Can we break this level? And when we broke that level, I got in with my first entry for the break of $1. So it was right here where I took my first entry. That was where I bought the stock. We break $1 and we squeeze up to $1.10. Now at this point, we're bullish. We're well above the point of control. We're well above the volume weighted average price. There's no question that the bulls are in control right now. The only regret that I have really is that I didn't buy the dip back here off of that previous point of control line. But you can see now the point of control line is moving higher. So we push a little bit higher, we push higher, and then we come back down, we dip down a little bit, and going into the open, we squeeze all the way up here to about $1.40. And the point of control continues to move higher as the price goes up. So now the point of control gets really high right here at about 38. And this is very interesting because right here, look at the volume weighted average price. It's way down to like $1 a share. So I'm like, yeah, we have supported $1, but the current trading price is like $1.38, $1.40. So support is 40 cents away. I'm not going to hold it all the way down to there. And in this area here, I was looking for that trade on the breakthrough $1.50. And as we held this support level, I was like, I think we're in good shape. I think we're going to see that break. And then we broke that point of control level. And at that point, I was like, all right, we're below the point of control. The bears are starting to take control of this stock. So now we're below the point of control line. And here we rally back up to it and we're struggling at it. Do you see this struggle? Now we've got a battle right here. And unfortunately, although it did get back above it, it wasn't able to hold this level. It kept trying and then failing, trying, testing, holding, and then rejecting. And so what ended up happening was my best trades on it were right in this area here. And then once we started experiencing this battle above and below the point of control line, we just became too choppy. Now, what I could also do here on this is add my MACD. So those of you guys who have watched my classes on how I use MACD will notice that right up here, we had the MACD that was open, and then we sort of had this crossover. We're sort of in this choppy area. We go positive, and then we go back negative right here. So that ended up being the MACD reversal. MACD comes down. It tries to swing back positive, but it fails. It tries, but it fails. And so the MACD basically tells us that we had a window on this trade from about 90 cents here, about 85, 90 cents, up to about $1.20. Then it pulls back, tries again, but fails right here, pulls back, and then it goes. But it really, to be honest, not the cleanest chart. Your MACD is giving you kind of the indicator to wait. Your volume profile is showing you we've got this major tug of war happening around $1.38, $1.40, and it's not able to hold over that level. So the way I traded this was I traded aggressively on the front side of the move, and then I stopped trading it. And I was done. And I did not trade it past this point right here. We rejected point of control. We weren't able to hold up, and it just sold off for the rest of the day. Now, this is very interesting here. Again, see how it comes right back up to that level, to the penny, and rejects? That means you're drawn. When you see something like that, that tells you you've drawn your ascending support and resistance levels the right way. Now, those of you guys who want to learn more about technical analysis, I'm actually going to put a link in the top of the comments. It'll be pinned, and in the top of the description for my ultimate technical analysis kit. It's basically a comprehensive collection of PDFs that you can download. You can print them out. You can put them around your trading station, and you can use these to help you better understand how I'm interpreting price action. And I'm doing this using technical analysis. If you haven't already checked out that download, make sure you download it, print it out, and you can have it on your desk. Because learning how to draw these support and resistance lines the right way really is critical. Because there's traders, no doubt, who bought right into this level, and then what does it do? It rejects. All right, so make sure you check out that download. That'll be a free gift for you guys today. Okay, so now we're going to jump back into the slide deck here. So my first trade here on LIPO was based on breaking news. So we had a news headline, right? I was using volume profile to help me understand, essentially, in this case, when to stop trading it. When I was first trading it, we were well above the point of control, but this did help me understand when to stop trading it when we had this area of challenge up here. And then we sold off at the open, and I was glad I took my profit. Now, the next stock I want to look at is YIBO. YIBO, I'm up $1,100 on. So this is not a huge winner for me today, but I want to cover the volume profile on this one as well. I mean, we will for all of them, but this is just the next one that we'll talk about. Okay, so here, this stock popped up kind of early at about 4:15 a.m. It dips back down. It rallies back up. It pulls back, and then kind of this 5:15 a.m. sort of struggling in this area. Notice our point of control line, right? So we're basically, again, straddling it. We're below it, below it, below it, above it, below it, below it. So this is an area, in other words, of consolidation. Now, granted, we are above the volume weighted average price the whole time, which is bullish, but we're not firmly holding above the point of control. We're generating a lot of volume in this consolidation range, and we're kind of struggling to break out. And then what ends up happening is we start to pull away. We start to base out and hold $5, which is psychological support at the $half hold dollar. So we hold 5 and we pull away up to 525, 550, up to 570, and then we start to pull back. So now let's jump forward to the next slide here. What ends up happening is we come back up here to 550, We pull up right here. The point of control line moves higher. We have this pop up, this pullback, and then right off of this level, we squeeze up to about 650 right here. And then we start to sell off. So this, again, is our point of control. And you can see that it moves as the price moves. Now, as we go further into the day, you'll see this point of control line ended up staying right here around this 545 level. So we were below it, then we were above it, and then we went back below it, which tells us that this stock was really not easy to trade. So now you've sort of got double levels of resistance coming back up. You've got VWAP and you have the point of control. We sell off, and then we rip up here at the open, which I think caught a lot of traders by surprise, including me. We squeeze up for a second. I got a dip and a rip on the halt resumption. We halt, we open higher, a quick rip, and then we quickly roll over and we come all the way back down. We try to bounce off right around this point of control line, and then we go lower. We come back up to it, and then we go lower. So again, just reaffirming, this is a level where there is a real battle. And for the most part today, we were trading below it. We were above it for a short period. We weren't able to hold. We went back negative. Then we got back above it and almost immediately rejected on high selling volume. So the volume is telling such a story here. You basically have a short burst of buying and then heavy selling following it. So this tells me that there were people that were unloading this stock. They were happy to get rid of it. And ultimately, the selling outweighed the buying. And so the stock maintained a bearish stance below VWAP and below the point of control line. So although I got a small scalp on it, the volume profile really wasn't very good, and I wasn't able to get positioned for a nice trade, which was sort of disappointing. This gives you a zoom in on the 10-second chart here. And what you have here is sort of this ascension, the break of VWAP up to point of control, and then it wasn't until we broke and held above point of control that we got this quick move. And I think that's really interesting because normally you would expect the big break will come as soon as you break VWAP, but in this case, because the point of control line was above VWAP, we broke VWAP, but then we had another piece of resistance right here. So we ran into the next level and we couldn't break that. We pulled back. And then we're pinned between VWAP and the point of control. But in this case, because of the time of day and the strong buying volume here, and I think because of the fact that the daily chart on, YIBO was unique. What was unique about this daily chart is that it's a blue sky setup. The all-time high was back here at $4. And when it squeezed up here, there was no resistance. None whatsoever. This is a stock that's a somewhat recent IPO. Now today it's got 30 million shares of volume, and unfortunately it's a red candle, but it's also not uncommon because there's often people that got in prior to the IPO that are going to take a day like this to cash in. Now, it's also true that there is no upside resistance, so these can sometimes move a lot higher, but I always approach that with a little bit of skepticism. So unfortunately, YIBO, I was a little bit cautious on it. Let me just check. I think this was the Chinese. Yeah, and this was a Chinese stock as well. So I was like, I don't know if we're going to be able to trust it. And no surprise, it did not hold its levels. So not shocking, but also not really a big deal. Now, if we look at this chart here, you'll also notice sort of this big difference between the point of control line and how high the volume weighted average price remained, right? Volume weighted average price remained high because, I mean, I guess just the average of the prices, the amount of volume that occurred at these high prices, but ultimately this was the price right here that in totality had the most volume by far. And so this became the area of point of control. Below it, bearish, above it, somewhat bullish, but again, still with a grain of salt because it's below the volume weighted average price. So some really interesting price action on this one, WIBO. Okay, so now we'll jump back here and we'll look at PALI. Okay, so PALI, this one was interesting. This one had breaking news at 8:30 a.m. and it completes microbiome study confirming So it's another one of these sort of biotech stocks. And I'm familiar with PALI because I've traded it before. But what I also know is that PALI doesn't always hold up. It gives us moves, it gives us volatility, but doesn't always hold those levels. So when it first hit my scanner, I'm thinking, all right, it's on my high day momentum scanner. So that's the scanner right in this area. And I am able to evaluate, of course, the time of day of the alert, the price of the stock, the flow, the volume, the relative volume, and then I can see the news headline right here. So I do all of that and I see, all right, this has news, it's moving higher. The float, 728,000 shares, super low float. This is a stock that has moved in the past. I should pay attention to it. So I put it on my level 2 and I just had it kind of on side chart. I was like, if it starts to squeeze, it starts to squeeze. And in this candle right here, it starts to pull away. Now at this point, where's the point of control? It's way down at 480, right? VWAP is down at like 470. So we're above point of control. We're above VWAP. So based on all of that, the position is bullish at the beginning of this move. Not surprising. So we punch up here to 530, we pull back, and then we push up to 550, we pull back, and then as we break 550, we go almost straight here to 560, 586, up to 640. Micro pullback, and we punch up to 660. So look at this volume. Volume is increasing and then peaking at the high. But that high volume has the effect of pulling the point of control way up real quick. The volume weighted average price moves up a little bit more slowly, lagging behind. And once again, we get this similar position where the price goes below point of control, above VWAP. Bearish, because we're below the point of control line, right? We come back up, we can't sustain, we drop back down. Now we're between the two. What happens? We roll over. So we really want to see when we have these pullbacks that we hold the point of control line. When we go below the point of control line, that's not good. So on this one, I had it on watch. As soon as it had news at 8:30, there were people in the chat room that said, hey, PALI's got news, keep it on watch. So at that point, I was like, good call. I didn't see the news headline come out, but thank you for bringing it to my attention. So I put the chart up on a side chart and I pulled up the level 2. So at that point, all I was waiting for was volume to come in. Right here, we got the first burst of volume, a little dip, and then we got more right here. So once volume was coming in, I was like, I'm jumping into this thing. And I was honestly surprised that we got a full $1 a share out of it from 530, 540, all the way up to 640, 650. I think we had hit a high of 660. So a solid trade on PALI, P-A-L-I, which ended up making it my biggest winner of the day. Now, what prevented me from giving back that profit and going back for another trade right in this area was seeing that point of control line. So again, this was really helping keep me out of a trade that I really kind of wasn't set up quite right any longer. Now I'll pull up the charts again and I'll show you the MACD, because once again, reaffirming that if you have MACD, it's also going to give you an edge in making sure you're not overstaying your welcome here on these. So, let's switch to the 10-second time frame. All right, so 10-second chart here on this one. This was a fast-moving stock. All right, so we're going to pull this back here. Let's see. All right, so right in here, we're going to get zoomed in and look at the MACD. So you could see on this one, I don't usually use MACD on a 10-second chart, but you can see again, that's the crossover right there. So, once you have that crossover, the moving averages are converging. We're coming into this consolidation zone below the point of control. It's not bullish anymore. And one of the problems on this was this highest volume candle being red. That is a red flag, literally, you could say. So red flag there on the high volume being red. And this had a chance right here to rally back up. And when it failed that was when I was like, no, this is not so great. So that was PALI. Now, if we jump back over here, let's talk about the pros and cons, and then we'll go over the recap of the rest of the trades from today. So what are the pros of using volume profile? The pros, I would say, is you have a better understanding of the point of control in a stock. Again, you can use this on any financial instrument, point of volume profile. You can use it on Forex or crypto or futures, whatever. I'm using it on stock, but you can use it on anything you can do technical analysis on. Above the point of control is bullish, below is bearish. And volume profile, it adds depth to the candlestick patterns because it helps you. And sometimes I put these slides together real quick before I teach this class. So I just finished trading today and then I added this slide. So it helps you understand why a stock is consolidating at various levels. So in this case, understanding, all right, we're consolidating at this level because this is the point of control. We're right below this critical level. That's why we're having resistance here. I think it's important and helpful to see that. Now, the cons of using volume profile, the only downside, in my opinion, is that it's yet another indicator to watch in your trading. And if you don't use indicators consistently, you might as well not use them at all, because they're really only useful if you're using them consistently in your trading. If you're using it, on 1 out of every 10 trades, then you're mostly ignoring it. So the one time you use it, maybe it's not helpful, right? Just like anything else, there's no strategy that's right 100% of the time. There's no indicator that's right 100% of the time. So it's in totality, if you use it consistently, does it work? Now, in this case, I think volume profile is a helpful indicator to use and to have on your charts. But I would use it on the 5-minute time frame, because that'll show you your point of control line, and that's really the most important thing. One thing that I do is I align it to the left. Some people have it aligned to the right, and I don't like that because I don't want it covering my candlesticks. So I just put it on the left. And to be honest, you probably could, if you really wanted to, get rid of the blue and the red here, or the blue and the orange, and just have the point of control line. But I don't do that. The developing, I don't use those right here. This is, I haven't found this to be helpful. So this is more of a standard deviation offset, but again, not helpful for me. So I just leave the point of control line, and that's it. When I see the prices above it, that's what I like to see. It is certainly noteworthy when we have the price break out of a consolidation zone. You have a consolidation zone like that, you break above that zone and you can hold above it. That's important. But I'm going to visualize that usually with horizontal support and resistance lines based on prices around $0.50 and whole dollars. So this is a clear level that was like a flat top. We broke above it and now we're holding. So it's kind of a combination of your technical analysis that you're going to do with ascending and horizontal support and resistance lines, and adding in point of control along with volume weighted average price. Okay, so now let's talk about my biggest loser of the day. So my biggest winner, as you can see, was PALI, LIPO, and then LIBO. Those are my 3 stocks I was green on, but I actually had 4 stocks today that I was red on. And I started the day by going in the red on my very first trade. So I sat down this morning at about 6:45, and at that time I was looking at the scanners and I saw LIPO or LIPO. And I thought, I don't know about it. I'm not sure. Like I said, it's a little too cheap, 200 EMA. It's got some issues. We'll see. And then BMR ends up hitting my scans, and BMR had news. And this one, again, you can see, kind of like PALI, it ended up being red on the day. Right now, it's actually down 6%, which is kind of ridiculous. So on this one, we'll start at the 10-second chart. We'll start really zoomed in. And so first of all, I noticed on the daily an area of resistance here at 573. Do you see that flat top right there? And then I saw if we broke that, we had room up to 671. So that was sort of the daily analysis that I did. I then zoom in. I'm on the 10-second and the 1-minute time frame. I'm looking for trades on this. And as it first pops up right here, I'm thinking this is like 748, 745. I'm like, okay, I think I can work with this. And I actually take my first trade right here at 741, right here. We're above point of control. We're above VWAP. Everything is bullish. We've got breaking news. So I'm like, this is fine. I get in at 541, 2,500 shares. I get out at 53 or 51 right here for like $200 of profit. Then it squeezes up right here. And I was like, I don't know if I want to get back in because we've got this resistance at 70. I think that's going to be a problem. So I hesitate right here. I don't get back in. And then it comes back up here. And it happened so fast where we're down here below VWAP, which normally, is bearish. We broke below VWAP. That's not a good thing. And then suddenly we're back up above that level. So we rip right here. And to be honest, I should have jumped back in right here as soon as we were back over the point of control and back over VWAP. but I hesitated because I was worried about this level up around 73. So it finally comes up here, and I end up buying this. Let's see. Let me just check the timestamps. This is 54. Yeah. So I ended up buying this at 590, and I bought to anticipate that we were just going to squeeze right through 6 with a target of 605 to 610. What ends up happening is we tap a high of 598, and then we drop back down here to 581. So I'm like, all right, that's not too bad. So I add to my position. I'm adding on this micro pullback right here, and I'm looking for the squeeze through 6. But guess what happens? We break 6 for a hot second, and then we flush back down. And rather than take profit off the table up here, I decided to add to the position. So I started with 2,500 shares, and then once I was up on the trade, I was like, you know what? I think this is the one. It's up, it's moving. So I'm adding at 605 and 610, and now I've got 15,000 shares, and my average is 598 right here. And it dumps here down to 580, and I was like, shoot, well, I got to get out. So I got out for a $2,000 loss on my first trade. And that's a big loss for my first trade. Well, it's actually technically my second trade. So now I'm down 1,800 on the day. And I'm like, yikes, that was not great. It dips down to 580, and then right here it comes back up. So when it comes back up, I got right back in right at 6. Once we got back over the point of control line, I was like, okay, I'm going to get back in here at $6, and we pop up to 620, and then we drop back down again, and same thing happened. I stopped out a second time. So I think most of you would probably look at this and be like, Ross, this should have been a winner. This should have been a winner. What's going on? Why were those not winning trades? You were clearly up on them. And the problem was, and I think this kind of speaks to, let's get some context here. You look at my trades from the last week, and you'll see that, I don't know why this isn't like that's weird. Anyways, doesn't matter. So you look at my trades from the last week here, and you'll see that I just have been having these really big green days. And I felt like, these are $20,000, $40,000 days. I felt like when BMR was starting to pull away, that this was going to be the one. So I was really quick to size up. In fact, I didn't wait until I had my $1,000 cushion before sizing up to 15,000 shares. And that was my biggest mistake. Rather than chip a couple base hits, I right away was like, here we go, home run potential. Part of that was because my first entry was at 540, and now I'm trading it up at 6, 50 cents higher. So I'm like, clearly it's up. But I just got myself too focused too quick on trying to hit a big winner rather than just taking the base hit off the table, because I had the potential on this to lock up 3 base hits, right? One was this one right here. And then regardless of the fact that I didn't get this trade down here, this still could have been a fine base hit. And this was a fine base hit. But instead, schmuck that I am, I added on this too high, and I screwed myself up. So now I'm red $3,700. I actually feel like I was red $4,000, but maybe that was because of the next trade. Yeah, it was. Okay, the next trade was LIDR. Okay, so now LIDR hits my scanners. You can see I'm red $386 on this one. It hits my scanner this morning pretty early. And again, I'm like, okay, this thing's hitting my scanners. I'm going to take a stab at it. And look at this rejection. Holy smokes. I got in at $2 and it goes up to 240. I didn't take anything off the table, and I stopped out right here. And I'm glad I stopped out, but man, what a rejection. But again, that could have been a small base hit, but I didn't take my profit off the table because now at this point, I was down $3,700 on the day. And I'm thinking I need more than, 20 cents a share to kind of get me out of the hole. I need a nice trade. And that unfortunately didn't happen on LIDR. So now I'm down $4,000. And as I said at the beginning of this episode, my daily max loss is minus 5K. That's my max loss. My daily goal is 5K and my weekly goal is 15K, because I figure one day out of each week I'll hit max loss. So 3 days of 5K green, 1 day 5K red, and then that cancels out one of these days, and this was 5K. So Monday, Tuesday, Wednesday, Thursday, Friday. So whatever day happens to be the red day, that's going to cancel out one of the green days. So weekly goal is daily times 3. So this was kind of my thinking here is, now you're starting to get real close to your daily max loss. So let's take a step back for a second. BMR, not obvious enough, didn't work. LIDR, not obvious enough, also didn't work. What is obvious right now? And that's when I said, you know what? It's time to trade LIPO. So I switched gears and started trading LIPO. And that ended up being my savior for the morning. So that recouped all my loss and put me in the green, trading that on the front side of this move as it broke this ascending resistance level and we started to pull away, right? So we already talked about LIPO. So this gave me my profit. Then I got the trade on PALI. That one came up next. And then I gave back on my last 2 trades, 900 on TWOU and CLDI. CLDI, this one was actually in the morning. Again, this is a stock that hit my scanner early. Very similar actually to a couple of the others, right? Like this pop up and then nasty rejection. So $800 loss on that, a little bit annoying. And here's the thing that I'll say about trading in general. To a certain extent, it's a little bit of a numbers game, which is that you can, if you trade for years and years and years and years, you know that you're right 65% of the time. There's just going to be a certain number of trades, 4 out of 10, roughly 3 out of 10, that you're going to lose on, no matter what. It's just the way it is. So I step up to the plate. If I see something moving, I'll take a stab. I'll try to break the ice, but I took some losses on those today. Now, my starter sizes across the board ended up getting bigger today, partly because of the momentum I've had in the last 2 weeks. And then LIPO gave me a nice cushion. So then I was like, all right, I can be a little more aggressive. So TWOU, this one actually did go higher before rejecting, but I got stopped out on it anyways. And that was this morning, right in this area. Now, what was interesting about this chart was that we had gap fill on the daily up to 398, and we filled that almost to the penny. So the way I traded this was initially, we got this halt up and then it opened, dipped and ripped, and I hesitated on it here, and then it ends up pushing higher, and I was like, gosh darn it, I kind of screwed up this trade. So it pulls back right through here, comes back up right through here, and I got in right in this area for the breakthrough high a day, and it just kind of stalled out. And you know what? I don't know. I just thought that it was going to break once we pulled away from that level. So if I back this up, you'll see the point of control line is going to move down a little bit. So I'm going to have to move it back into this area. So as it started to pull away here at 80, this is where I was like, okay, we're going for 3, and I got stopped out right here. Then it rips back up, but I was like, whatever. So anyways, 10,000 shares, lost 9 cents a share on that one. And at that point, I was like, you know what? I think I'm good. I peaked at about 14,000 today, maybe 13,000, right around there. So gave back about $2,000 off the top on CLDI, I guess a little bit, and CWOU, and I actually gave back half of what I had on YIBO. I was up a bit more on that, and I gave back half. So I overstayed my welcome on that one a little bit too. And so at that point, I was like, you know what? $11,000 is a pretty solid day. It's still double the daily goal in gross profit. Now, the one thing I'll say today is that my commissions are steep. I traded a lot of shares, especially on LIPO. I was jumping in, jumping out, jumping in, jumping out. So my commissions on LIPO are over $2,000. It's over 25% of my profit, which is a shame. This is the cost of doing business, but it is unfortunate because I know a lot of you guys trading with commission-free brokers have 0 commissions on those trades. But for me, I paid the commission on it, and it is what it is. So my net today after fees and commissions is going to be closer to 8,000 something. So I've got some real fees and commissions today for sure, but again, at the end of the day, I'm not too worried about it because I don't typically trade those low price stocks. and it still helped me recover the losses that I had on BMR, and it's still a solid green day. So I had sort of a swing in the P&L from down almost 5 to up 13, finishing at 11,600, have some fees and commissions. Wasn't the cleanest day. So my goal is to try to do a little bit better tomorrow. Now, those of you guys who want to do a 2-week trial at Warrior Trading, I'm actually going to give you a link here. It's going to be pinned to the top of the comments, and it'll be right next to the link to download my technical analysis toolkit, or my comprehensive guide. So this is a link for the 2-week trial at Warrior Trading. So you guys can do this. It's $20 for 2 weeks. That'll give you 2 weeks of access, and it gives you access to all of the market data. So you'll have real-time scans and charts during your trial. You can have access to this platform in addition to my broadcast and a selection of classes from the Warrior Pro curriculum. So you guys should definitely check that out if you haven't already. And if you didn't already download my technical analysis worksheet, that PDF, make sure you check that out. You can download it, you can print it out. And I want to encourage you to start testing out some of the things you're learning, but I want to remind you, as always, my results are not typical. I've been trading for a long time, and so I always want you to trade in a simulator before you put real money on the line. Because look, if you can't make money in a simulator, you have no business trading with real money. So take it slow. The market will be here for you. All right. So set a solid foundation, learn the right way. And I always think it's great to learn from someone who is actually proven profitable. And if you're ever curious, you can check out my broker statements. They're on the footer of the website Warrior Trading, and you can see my audited performance records as well. So thanks as always for tuning in. I hope you hit that thumbs up, subscribe to the channel, and I will see you for the next episode real soon.